What's up everyone, and you are watching What's Up Ryan. In today's episode, we're going to be covering the types of risk when you're investing in cryptocurrencies. Now, everyone likes to put their money into crypto, whether is it on a speculative basis or as an investment. And if we do not understand the risk involved in crypto, why are we even doing it? So the high net worth customers, or whenever a fund manager puts their money or decides to create a fund around cryptocurrencies, they are fully aware of the various risks involved. Even if there's a monetary gain at the end of the day, either for themselves when they're managing the money for their clients, or they're putting in their own money, they are clearly aware of that risk. So why aren't you? So in this episode, we're going to be covering the types of risks involved in crypto and how you can create a portfolio around cryptocurrencies as well. So let's get into it, guys. Hope everyone feels hope everyone feels up to a nice lesson in risk, because whenever I go through all these questions with my client, right, they are clearly aware of a few risks, especially if they've had experience in trading or investing in the traditional market. So let me give you a few examples first. So in the stock market, right, okay, there are a few risks. Firstly, we look at the market risk. Okay, what kind of market is this particular stock in? For example, it can be in the banking and finance sector. It can be in the food and beverage business. It can be in fast moving consumer goods, right? FMCG, right? It can be in agriculture. So it in itself is also a type of market and industry. So these are the things, right? Then obviously, if you narrow it down, it can be even an industry risk. Okay, and then after that, there is the country itself. Okay, country risk. Then after that, it goes down, so on and so forth. So you look at it from let's say a macro level to a micro level. Then after that, it can be even looking at the type of investment it is. There's liquidity risk, okay, so on and so forth. So I think you kind of get the idea, okay. And when you kind of identify the risk involved in crypto, okay, you kind of want to identify the asset class involved, or that particular crypto first, right? Crypto, to me, when I look at the whole asset class, I consider the whole asset class risky. Now, there are a few things that we want to take notes. So firstly, crypto as a whole, where do we classify crypto? Firstly, crypto is high risk, okay? So firstly, crypto in general is high risk. No doubt about it. Why? Okay, firstly, it's a volatile asset class. Okay, so it's a volatile asset class, meaning that it moves up and down relatively quickly due to the fact that it doesn't have a lot of liquidity. And when an asset class doesn't have a lot of liquidity, right, it tends to be able to move up and down due to very huge price in demand and supply. When the demand of a particular cryptocurrency is relatively high, the order books can easily be filled up, right, or be bought up relatively quickly. At the same time, because if the order books are very, very thin, it tends to also get sold down, because sometimes the orders, if let's say, for example, someone desperately wants to sell a particular asset class and there's not enough liquidity available, the order books also tend to are too thin, and they tend to just want to sell down their asset desperately. They'll go through the order books relatively quickly. So that causes a lot of volatility in that particular crypto. So hence you can see a spike up in terms of movement, and you notice that it doesn't require a lot. Maybe in terms of transactions of anywhere from 1 to 3 million tokens changing hands, you will see a very nice spike up in terms of the candle. So what happens is that, let me draw it for you. So let's say, for example, you have not much activity, and then suddenly there's this huge spike, right? Because order books were relatively thin to begin with, Okay, so so usually you know, you have your order books you know, all around here. This is the sell, this is the buy, right? So this is what happens, right? When there are not much there's not much volume, then someone who decides to buy will obviously have to buy up whatever that's available here. Okay, and then eventually when there is a take profit that occurs, but there's not enough volume, say at a certain price, right, they would have to sell down whatever price that's available here, whoever is willing to buy. So sometimes the buys are not as strong, so you can look at it from the depth of what are the buy and sell. So that causes a lot of price volatility. Okay, then when you talk about price volatility, you look at liquidity, right? How much liquidity is there? So the good thing, okay, so the good and bad thing is that there is an exchange for you. Whereas if you look at certain investments, or when you look at certain investments, sometimes they are lacking in liquidity, or there's a secondary market that is available for them to start transacting. So when there's a lack of when there is a lack of liquidity in a particular asset class, okay, liquid just means can you buy and can you sell it easily. Okay, so that's what it means. You must be in an asset class that you're able to buy and sell easily. If not, it's actually very risky for you, because you do not know the time horizon involved. You do not know when do you need to sell it, right? You do not know when you need to sell off your particular asset, and having that liquidity is important. So the next one is we want to talk about is for example, you talk about the time horizon. Okay, time risk. Okay, time risk is something where a lot of people underestimate. When you talk about time risk, there are two sides of the coin. One is your own personal time horizon when investing in the space, and at the same time, another one is the time horizon for the company that you're investing in to mature and produce a revenue, build up their user base, and then from then start profiting. This part is the part where a lot of people require a lot of experience, and there's no hard and fast rule, there's no guarantees, and the whole idea is to identify that as quickly as possible. At least you understand, okay, if let's say in a roadmap, let's talk about, maybe before we go into the project, let's talk about ourselves first. Say if you know that this space is high risk, you know that it is very volatile, and at the same time there are occasions when there is liquidity issues. Oh, by the way, liquidity also could fall in the category of a delisting, right? Where companies, right, that are trading on a particular exchange, suddenly, because they fall short of the exchange's requirements, or they fail in reporting regularly, they usually get reporting. When I say reporting, means that companies who are listed on reputable exchanges, right, they are expected to report on their progress in terms of progress and development. Okay, there has to be, I think, either monthly or even quarterly updates on how their project their project is running, right? And if they fail to produce these levels of transparency, the exchanges will usually give them a warning, or no warning at all, and delist them. Once they get delisted, right, they actually are no longer liquid in that sense. You can't even sell anymore, right? And that causes a huge dump in the particular crypto. So take note, okay, liquidity, or you can call it delisting risk if you want, right? So there's a few. So now time risk, back to time risk. Time risk is for yourself. Take note that when you put an investment in, you are putting in your money, right? And when you put in your money, you have to ask yourself, how long do I see myself being in this space? And by putting my funds in this space, if I don't need these funds, right, for an X amount of time, is it going to cause any detriment to my lifestyle? Okay, and it should never be the case. You should never have the situation where you need the money from the market. Okay, I never ever have to use the money that I put into an investment and I needed to pay for my daughter's monthly school fees, or I need to pay for diapers or rental next week. I never ever have that as a consideration, never, okay? Because I have other streams of income, right, that is taking care of those monthly liabilities to weekly or whatever it is, car payments, mortgage or whatever. Okay, this is the way that you should think, because a lot of folks, right, they have this amount of money and sometimes, right, they need it for an emergency situation. Okay, and I've heard of stories where I put in my children's education fund into this. I've put in my retirement funds into this. You can look at all these things and put certain amounts of, or a portion of these funds, if you already know how to have an asset allocation. You've already done a proper allocation in the way that you manage the money. Like, you know that, let me give an example. If I know that my daughter's future university or whatever requires 100,000, okay, and I know that now till then, okay, I know that I can make back the difference, knowing that my daughter will only be able to even go to a university when she turns 21, okay, for example. So I have an X amount of years from now till then, identifying the time horizon, and now till then, what is the likelihood of this investment turning a profit? Okay, so I don't want to lock up my liquidity, because I understand that now till then, this 100,000 probably does nothing, because I don't want to jeopardize the eventual outcome of her being able to go to a university or whatever, or if she requires the money. From there, I need to identify, if I enter an opportunity now with that amount of funds, how much of that fund am I able to utilize? So say, for example, I'm someone who's working at the moment. I have investments, income coming in from other investments and other parts of whatever revenue stream that you have. Okay, so calculating that, I know that I can easily make that back. But it doesn't mean that I want to utilize the whole 100,000. I will probably utilize, say, 10%, okay, or even less, to place into an asset class that is high risk. But if I am confident about this particular asset class based on my comfort level, obviously I would increase that allocation, knowing full well that I can compensate for the loss in that fund. Do you understand? Okay, so you have to think on that higher level. It's not just, okay, I'm making this amount of. You can think of it that way as well. If I have a job and this job is paying me $10,000, right, and I'm able to save $5,000 every month, okay, so I save 50%. 5%, the remainder, okay, will either go back to topping up that fund immediately the moment I start allocating the money now to a particular investment. That's also a potential thing that you could do. Now, I'm not recommending that you do it. Like I said, none of this episode is financial advice. It's really just perspective. Giving you a perspective, and like I said, this is based on experience. I've done this before in my professional career. At the same time, also, I am someone who is qualified to do such a thing. But licensing, when it comes down to any kind of financial advice, right, always look for your financial advisor. I am not your financial advisor, because you're not engaging me, okay? But I'm sharing with you how we look at things. So that's the time risk, right? So after you identify the time horizon required for that particular investment, it goes down to identifying how long that particular project is gonna bear fruit. So you have to look at it from a whole industry already. Okay, so 5. I'm gonna talk vice versa, right? So industry, and when you look at the whole industry, right? If you look at the industry as a whole, and you're investing in a crypto project that says that they are gonna launch a debit card, for example. So you have to be a little bit more experience in looking at how long it takes, right, for this debit card to be used. So we think about when we use a debit card. Okay, I'm giving you examples now. Okay, if you're gonna invest in a particular project that is in the crypto debit card market, how many crypto debit cards are there? At the same time, what are these tie-ups? Can these is there a system in place that requires the merchant to accept the crypto as it is, or the back-end system that this company is intending to provide will automatically convert the crypto to fiat for the merchant, and there's zero risk to the merchant, right? The more things that this particular company sorts out, okay, the better it is, the faster they will be able to get their product out to market, and that's what you want. But how long does it take? Sometimes it's based on the overall sentiment of the market, right? If no one gives a shit about cryptocurrencies, like I can clearly use my fiat, my existing credit card, my debit card, my points card from Alipay or WeChat Pay or whatever, why on earth, right, would I give a crap about a particular crypto debit card? I still have to go and buy the crypto. That it becomes very niche, right? Obviously, we are in a niche. We are in a niche, guys. That's why you notice that this space, right, doesn't have as much noise, and it doesn't create much noise. At the time when crypto was hot, everyone was only talking about Bitcoin. Nobody knows about about anything else. If you look at how the top YouTubers kind of used Bitcoin as a form of trending topic to talk about, you'll be looking at people who don't even talk about Bitcoin, but suddenly they made an episode about Bitcoin. So you just know that, okay, there's enough hype that these YouTubers that are usually creating fun content or whatever suddenly start talking about it for the sake of getting views and, of course, advertising revenue. That's fine, that's cool. It just goes to show that there is a certain level of adoption, but the industry is not ready. There is very, very little things. For example, there's no tie-up. If I wanted to go out there and started using a particular cryptocurrency, what's the likelihood of me being able to buy a drink, buy food for myself, buy clothes for myself, and all that? So if you have a crypto debit card business, and if you decide to invest in a crypto debit card business, right, you have to think about all these things. What is the company doing at the moment, right? And what kind of networks is it having? What kind of partnerships is it forming? So the time frame that is required, right, usually takes a number of years. It's never a number of months. Could there be volatility in a number of months? Sure. But you are gambling if you think that way. So you shouldn't do that, right? So I mean, for me, I would never do such a thing. And I just wanted to cover that. So now there is more types of risk involved, okay? So let's look at the fact that if one creates a portfolio, right, you're gonna have so just now was 5, so now it's 6, okay? Then we look at the risk of so we've covered liquidity, we've covered also the liquidity risk, market risk. So far, okay, and then after that we want to cover also I think there's one more risk. Let me double check. So see guys, that's the thing about life, right? On the spot, I'm already having to think because it's based on experience. It's nothing to do with being prepared or whatever. It's just that there's a lot of risk involved when you are investing in crypto. And crypto is something that's so volatile, and sometimes I really wonder how you all look at certain things, right? And it really baffles me on and also at the same time, you do not know how much money one is putting into this space. So what I do, I just create the episode. You go and decide for yourself how you interact. Like I said, we cover all this in masterclass, right? Masterclass is something that I will always be doing once a month to even 2 times a month to make sure that folks are well equipped once the whole bull market starts to come back. Because we have been in a bear market, this is the 2nd year of the bear market. Personally, I feel that even if we are in a bear market for the next 3 years, right, it is the best time for accumulation, okay? And I believe that crypto as an asset class is one of the essential core parts for you to really have life-changing income. Therefore, I'm definitely open to teach it, and therefore I'm willing to share my experience as a practitioner myself from a professional standpoint back in banking and finance, and at the same time I am making sure that you are educated to identify the risks and rewards that are available in this space. So the next thing is, of course, you look at regulatory risk, okay? Yes, okay, so regulatory risk. See, I have to usually talk a little bit and then after that it pops out. Okay, so regulatory risk, what is that? Every country has a governing body, okay? Whether is it based, it's a monetary authority, okay? And anything that involves money, which clearly this is, or fundraising, or registering your business, and because you're accepting the money from that particular country's people, or operating in such a way or in such a manner that you're raising money, there is regulatory risk, right? That country could suddenly shut down the whole ecosystem. which is like what China did. China shut down ICOs back in July of 2017, and that kind of caused a very sharp dip in a very high risk volatile market. As you can see, I'm relating back to the risk that I put there, and caused a lot of panic and fear, because suddenly everybody was saying, shit, Bitcoin is dead, nobody wants Bitcoin anymore because, you know, China shut down ICOs. But then that didn't really happen, because Bitcoin, obviously, if you understand the fundamentals, is a decentralized network. It's the internet of money. It's the people's money as per se, because it was not issued by any central bank. So there's no regulatory risk on that part, because nobody is going to claim that they're going to own it. Some people are blatantly trying to say that they are the main Satoshi, but then there comes with a lot of consequences by blatantly saying that you are the actual guy that created it, because a lot of things kind of happen from when it was created until now that could easily could easily chalk up in a lot of legal issues. So take note. So anyway, regulatory risk. As I said, your country could actually have a very negative to positive view on cryptocurrencies, or companies that are trying to raise money through crypto and being even registered as a crypto company. What is that like? Well, as crypto grinders, so far, let's just say, let me share with you, like, from my company's perspective. So far, my country is still okay if I even have the name Crypto Grinders. Hence, I am registered. My company is registered as Crypto Grinders Private Limited. We are able to open bank accounts, but we're not in the business of raising funds, or we're not in the business of we are transacting in crypto. But as long as we declare our revenue that comes in crypto, that means we must, whatever crypto that comes in, right, we must be able to book it with invoices and so on and so forth. So as long as we do that, right, our country is fine, okay? Because if we accept $100 in a particular transaction, we declare on our books that we received $100. So it's okay that we accept crypto, and as long as we are able to identify with invoices and all that, it's okay, right? That's why there are merchants here that accept crypto, because now, for example, PundiX is already building their business in Singapore, and of course other parts of the world. They are going to merchants who are in the F&B business, and they are putting out their POS just to encourage them to use crypto as a form of payment. Are they accepting crypto? No, they're not. The merchants are not required to accept crypto. Everything is done in the back end, and PundiX settles everything else. So it's just a use case, but they're not touching the crypto at all. So there's no risk to the particular merchant. Okay. So now that we have identified that, regulatory wise, like I said, countries can shut it down, countries can be open to it, countries can be taking a stance where they're neutral and they allow the industry to mature. Okay. So that is kind of like the risk that I can think of from the top of my head. Now, when we look at it, also, you do not want to have, you do not want to, when you talk about the portfolio, right? You don't want to have the right thing to do. Okay, the right thing to do. Okay, there's no wrong or right thing, but to me, I'm gonna do this. Okay. So for example, after you have identified whatever risk that is available in the market already, you want to kind of segregate. So if let's say I have let's say I have $10,000. Okay, I'm giving you an example here. If I have $10,000 that is available, do I want to put it all into crypto? The question, there's no right or wrong answer, like I said. Okay, or do I want to put a portion? Okay, so I either dedicate, say, a portion of it. Say, okay, so that you have to determine this, what does this mean to you? Okay, back to the whole episode, where are you going to be what do you need the money for? So you have to ask yourself, okay, so you ask yourself, what do I need the money for? Need the money for, okay. When do you need the money? Do I need the money? Okay. When do I need the money? What do I need the money for? When do I need the money? Okay. So if you can answer these questions, right, Okay, if you can answer these questions, then great. Okay, so, oh, sorry, wait, give me a second. Okay, so when do I need the money? What do I need? What do I need the money for? So after you have identified that, right? Okay, then you go on, and then and obviously, okay, after doing that, you say that, okay, I don't mind. I don't mind being able to put in $200. Okay, so let's say $200. Okay, and from a very simple point of view, right? Can you make this money back? Okay, if you can make it back, and it doesn't affect this, right? You're good. Okay, you're good. It's just very straightforward. So what I do, right, is that if I am someone who has the liquidity, so I always like to put myself in someone else's shoes, okay, for example, and then if I am able to make back that money, and it's not gonna affect me one single bit, I will definitely be dedicating this amount to building up my portfolio in cryptocurrency. So what I do is I will every month I'll put in $200. Okay. And of of course, you know, you just kind of want to, and you can do this by, it's called the dollar cost averaging strategy. Whoa, okay, sorry. Okay. So it's called this is called the DCA, right? Or we call it dollar cost averaging strategy. Very, very simple. Wow. So you're probably asking, okay, that sounds very straightforward, very simple. And because every month, right? Why am I able to do this? Because my job pays me $3,000. So if my job pays me $3,000, I'm clearly able to replenish back this fund. Okay, simple as that, right? Very, very straightforward. Now, what about wait, Ryan, come on. What if I see the opportunity like really good now, and I want to do like one whole lump sum? Okay, what if I do one shot? Okay, there are pros and cons, okay, to both. Now let me just share with you. So now, say for example, right, if you are, we know that the crypto market is now like that. Okay, a lot of charts are like that. Okay, this is the 2018 high. Oh my goodness, guys, bear with me. And then this is the so we had this consolidation. Sorry, we had this consolidation. This was when Bitcoin was 6,000, and then now we're at 3,900. Okay, and all. Oh god, sorry guys, if you can't see, I'm so sorry. So 2018, this was Bitcoin 20,000, and then this was 6,000 Bitcoin, and then after that, okay, then this is 3,900. So every single cryptocurrency right now, it has kind of like dropped anywhere from 85% to 90%, and you decide to put in this money now. Okay, obviously you stand a chance to benefit greatly compared to people who are doing the dollar cost averaging strategy. But take note that if, right, Bitcoin decides to take a shit further, let's assume $2,000 or something like that, or whatever. Okay, I'm not here to do a prediction. I'm just giving you assumptions and scenarios. So if that happens, right, this could easily get cut in half. So we have to ask ourselves, are we cool with that? Are we cool with our 10K dropping and becoming half? Now, so it's all about based on your belief already, your belief system. I clearly know after identifying the risk that there's the market risk, there's the country risk of how this thing is going to turn out. I know that the progress in development is going to take 3 years. I know that I don't need the money for 3 years. You see, you've identified all the risks. You played the risk in your head. And ultimately, the whole idea is to manage that risk. Mentally, you're prepared. At the same time, financially, you are prepared. And that's how you kind of look at all these things, because most people, right, are not skilled enough to even talk about all these things. Everybody can talk about a technical analysis point of view or whatever, but no one is skilled enough to even go through all these things with you. And you don't even know how to go through all these things with yourself because you never even identified the initial risk involved, or you didn't even understand the term risk. Right? The only risk that you probably know is I either lose my money or my money is stuck. Okay? For now, I think everybody understands the term backholding or hodling or whatever the shit is, right? That's considered liquidity risk. Okay, you are not even able to sell because there's not enough volume on that particular pair for you to sell off your crypto, right? So that's a liquidity risk. The next thing is that you are now stuck, and when you're stuck, you require the funds and you don't even have the funds to pay you back. I always hear people saying, oh shit, I put in too much of my money, I don't have the money anymore to pay off for certain things, I'm dead. That's because you didn't watch episodes involving risk. You didn't even bother to read about all these kind of things. You got into the hype because you watched it, YouTubers just talking about this particular crypto, and none of them are offering you financial advice, my friend. None. No one. Because you didn't engage, you assumed, you listened to what you wanted to listen to, and then you decided to put the money in. Honestly, that is the part of ignorance, and that is the part of not being well informed or well educated. So anyway, guys, that is the end of the episode. I hope that it gave you a brief, very quick overview on how you identify risk. I hope that more people will start using these kind of information to your advantage, and that's the whole idea. Look into my free course, guys. I think my free course already covers all these things. My free course on Udemy already covers all these things. At the same time, if you don't have time to go through the many hours of our content on YouTube or Udemy, we have a live masterclass happening in Singapore, and we're going to be launching the form very soon for anyone to sign up. It's open to anyone available, anyone in the world. Okay, it's open to anyone in the world, as long as you're willing to come down to Singapore and learn. All right, from me especially. I've been in the space for 3 years. I have banking and finance experience, and at the same time also I've been in the industry for finance, and of course naturally managing finances for over 11 years, guys. This is not something that you do overnight. This is not something that you can do simply. Okay, you have to understand all these things. From there, we will teach and break it down for you very quickly in a 2-day workshop. All these things are going to be handled, so you will know how to buy and sell, you know how to manage your portfolio. At the same time also, there's going to be live practical there's going to be a live there's going to be practical workshops within this particular event as well. And then from then we are going to handhold you for the next 12 months to make sure that at least you know what to do, right? You won't be left alone, because the whole idea is not to get you in on the 2 days and then after that you don't know what to do. Because trust me when I say this, 2 days is not enough. It is never enough. Okay, you need to be able to be in it for at least a whole full cycle. When I say a full cycle, means in a bull and a bear market, then you completely understand how investing is like. Okay, and I think it usually takes even longer for some people. Like some of our students, they're okay after 3 months. Some of our students require 1 whole year and they're still asking questions. It is not easy. Okay, it is never easy. It should not be easy, because making money, there is an easy way of understanding it, but when you talk about actually executing and being practical, it is not easy. Like I said, it took me 11 years to identify the skill sets to make money. And that's how I was able to make money, because I was able to identify when to get in, when to get out, why I should stay invested, why I should be trading it. All these questions will be answered in the live masterclass, guys. So that being said, give a little bit of a shill, but give this video a thumbs up if you felt that it was of value to you. And are there other types of risks that you are aware of, that you would like to have those answered? Feel free to, of course, comment below. I will be more than happy to address them. And like I said, I'm always reading your comments, guys, because the more comments I get on each episode, the better it is for me to create another episode, because I know what exactly you guys are looking for. And then last but not least, subscribe to the channel. We appreciate, we want to grow our channel. And last but not least, click on the notification bell so that you do not miss another live episode with me every day. I will cover at 9 a.m. Eastern Standard Time, 9 p.m. Eastern Standard Time, or 10 a.m. Singapore time. All right, guys, take care. See you guys in the next episode.